Yo, what's up guys? It's Will back in the house, Will Trades. Hope everybody's having a great start to their day, evening, or night. Today I'm going to be talking about liquidity sweeps. Liquidity sweeps are so important for you guys to understand, and it will definitely help you become a better and profitable trader. Before I even knew what liquidity sweeps were, got toasted every single time in my trading. I literally entered on a certain support, entered on a certain resistance, didn't know what liquidity was, and it stopped me out every single time until it went back in the direction that I thought it would go in. Super frustrating, lost thousands of dollars, blew thousands of funded accounts, and now I'm here to show you guys the right way to trade liquidity sweeps so you don't do the mistakes I did 2 years ago. Become profitable, stay smart, and stay green. Let's hop on over to the charts and let me show you what a liquidity sweep even is. Alright, so what is a withdrawal on liquidity? Well, it pretty much means where higher highs are and higher lows are. Well, what does that mean? Well, this right here is a draw of liquidity, right? You can see that we're at lower lows, we come up, price comes down this level, grabs liquidity. What does liquidity mean? Where resting orders are, where money is. And we go ahead and we say, hey, this right here is a draw of liquidity, price goes higher. This right here is a draw of liquidity, price goes lower. This right here, let me show you, is a draw of liquidity. Let me pull it down, give me a second, right? Price breaks through it, grabs liquidity, and pulls right back down. Okay, and actually I just gave you a real-time example. So how can we identify where liquidity is, where liquidity lies, and how does that benefit us in the long picture? Well, let's go ahead and remove this on a farther out time frame, and let me show you. I'm gonna go to the 1 hour time frame. What you guys are looking at is the NQ NASDAQ. This is what I trade every single day. I'm a futures day trader if you do not know. Well, we can obviously see that there's obvious support right here, and there's obvious resistance right here. Cool. We're obviously in a channel, in a boring channel, right? But there's tiny little levels of liquidity here. Let me make these lines a little lighter. Actually, to make it easier for you, I'm gonna do this. To make it a little, there we go. And let's make this 1, perfect. So here's a little draw of liquidity right here. There's a draw of liquidity right there. Keep forgetting it goes halfway. There's a draw of liquidity right here. And what does that mean? Well, when price gets into this level, right, liquidity is drawn and then pushing price in the opposite direction. So when I go into these positions, I have main support, main resistance, right? Draw liquidity. So people are obviously getting into this, grabbing the liquidity down here. It's not the retail traders. The retail traders fail at this. The hedge funds, the billionaire companies, the big institutions want to grab the liquidity, which is called a liquidity sweep, to push the price in the opposite direction. This is a tiny little liquidity sweep right here, liquidity right here, liquidity right here, right? So when retail traders go into this, like, oh, look, we're making higher highs, higher lows. I'm going to get in right here. Or, hey, we're making higher highs, higher lows. I'm going to get in right here, right? Or we're going lower lows. I'm going to get in right here on the downside. And then look what happens. So retail traders get very confused on, I think we're going higher. Buys here, gets stopped out. Draw of liquidity. Buys here, gets stopped out, right? And it happens over and over and over again. So what can we do to make sure that that doesn't happen to us, to our favorite Joes, our favorite team out there, the stock seeker knights, right? Or you just average, amazing retail trader. Let's make you a hedge fund trader. Think like a hedge fund. Think where the big money's going, because that's where they want to stop you out. So for example, if I know we're at previous high resistance right over here, most likely what's going to happen? Sellers are going to step up into this area. Cool. Well, how does that help us? Well, now I know price is coming up to here. So do I really want to buy long right here? There's going to be liquidity right over here. I can show you, right? Liquidity sweep, liquidity sweep. So do I really want to buy long here? No, I do not, right? If I really want to go into a position right here, I probably want to go short because that's where the big hedge funds, big billionaire institutions are. They're going to grab the liquidity, go lower, and then they're pushing the price down back into the next liquidity. When pretty comes here, sellers probably get stepped in here, they get stopped out, and then it goes higher. And they do this all the way into the range until main resistance and main support. You guys have to understand that, right? So if I was going to trade this, I'll be like, okay, we're at main demand. Okay, we're coming back up. Do I short this? No, we're not even close to main demand. So I'll probably buy in the liquidity here, right? For lower lows, lower highs, get out maybe a next liquidity sweep right here, right? If I wanted to wait, do I buy on this break? No, I want to see if liquidity gets swept. Once it gets swept, we move into the opposite direction, then we go higher, right? I want to buy where people are selling. I want to sell where people are buying in the overall trend of the direction. Okay, guys? Doing this will help you identify your entries and your exits, your stop losses, and to make sure you don't get wicked out every single time. Because when you guys get wicked out every single time, that's probably pretty annoying. Very annoying, actually. Right? Man, I'm going long here. Boom, get stopped out. Oh my gosh, what did I do? Why did it go there? We're making high highs. Why did I keep failing? Because there's a liquidity sweep right here. You shouldn't have even gone long right here yet. Right? And if I go to a 1 minute time frame, you guys can see on a smaller picture, here, liquidity sweep. Right? Liquidity sweep. Liquidity sweep. Liquidity sweep. Right? So draw all where liquidity lies is on all lows and all highs. Well, lows, highs, low, high, high, right? And that's where liquidity is, and that's how it can form our smart entries and exits on each position, right? When we enter here, do we want to go long here? No, liquidity sweep comes back down into main level of demand. Now what happens? We try to break again. Do we want to enter? No. We want to wait for liquidity to be drawn so we can enter probably down here where the hedge funds liquidity is being bought up and then go long into it, right? And then there's another level of liquidity right here and we can exit right here. And that's the moves we want to capture. We don't want to capture, because we're going to get stopped out 1,000 times over and over and over again. It's going to suck. It's going to hurt. And you guys don't want to be in there. Understand liquidity, but at the same time, understand where the levels are. Lower highs, lower lows, what's the overall trend, and go from there. I want you guys to be successful at this. I want you guys to understand this. I want you guys to make sure that you're killing it every single day in the markets. Anyways, peace, guys, and we'll talk in the next one.